Hello everyone, it's me the Boss Hog and we're back with another video, this time about building wealth on our road to 5 million. As of the end of December 2023, honestly it's been an incredible month. We've jumped over 40,000 in a single month. That feels really good and I'm going to explain why. Let's do it. Alright, so we're still away with my wife's family in Poland, which means I still haven't had time to visit the barbers, which means I look like this, so you'll just have to deal with it. However, I had a little bit of time this evening and I thought it would be good to do one of these videos. So anyway, then let's start with this. So this was new data last month, but I think we're going to just tweak it, but I want to keep it moving forward. This time I've added November and December in terms of the breakdown between invested worth and profit. And I've also just color coded this, so hopefully you can see how it reconciles, etc. Honestly, a significant increase month on month. That's a result of both my wife primarily getting a Christmas bonus, as well as sort of certain costs being reduced less than expected, although others were a bit higher. But honestly, what's been really driving this has been just great performance. Portfolio is up sort of 10% in a month on top of the previous 10% in a month, so that's going to feel really good. A lot of our wealth is exposed to the stock market, so if the stock market's doing well, we're doing well. And ultimately, it means that we've closed the gap quite a lot on what are still quite ambitious growth targets. So that, again, it feels really great. It's still quite difficult to see this red line, and we've still got 2 decades to go, give or take. But we're definitely making some good progress across the month of December. So our aim remains to have 500k by the end of March. Honestly, I had thought that that was more or less an impossible target 2 months ago, but now it's definitely possible. So only 40k across the 3 months. Again, a lot of that is going to depend on stock market performance. I don't have any more surprises, bonuses, or anything like that before then, so we'll see. Similarly, as well for the end of December, the end of 2024. We're meant to be on track for 600k. Again, I think that's super ambitious, but we'll see. I am hoping to increase our contributions next year, so that might help. But again, we are still definitely at the whims of the stock market, and if it has another 20-25% year, we may well do it. If not, then it might fall quite far behind. So again, we shall see. And then I guess this is good to put in here as well. The next big milestone is going to be 750k for October 25. So a little way off, but not that far off. And again, the hockey stick kind of gets going here relatively quickly. So these are our targets. And again, we'll just keep these honest over time. And we'll do sort of a running 12 months maybe on the left and sort of 3 months probably in terms of the details underneath. I'll have a little bit of a play with that. But yeah, we'll keep these updated and see how we do against our long-term targets there to reach 5 mil. All right, so we're going to summarize this before we go through the details. So overall, we're going to finish the year on 77k, give or take, 10% ahead of our target, so really good. I did honestly expect this to be a little bit closer to 80k, but partly that was because a component of my wife's bonus got messed up a little bit by their payroll, by her employer's payroll. So instead that's going to be landing at the end of January, but it's not a huge amount, but still it's like very low 4 figures. So that had an impact. Also, as well, I don't exactly know what's on my wife's credit card just yet. I do sort of a reconciliation on about the 9th of the month when it lands, but she admitted that it was quite an expensive month. I think sort of some Christmas presents, some Amazon shops, etc. We ended up spending a bit more in certain areas. I also got a few months ahead in 1 or 2 of my costs, including sort of ground rent and things like that. So that felt pretty good from that perspective as well. So yeah, I think overall I'm still happy. It would have been nice to have seen this start with an 8, but honestly, having started the year not 100% sure we could even hit the 70, this feels fantastic. The green bar there on the right, these are our targets for 2024. Now, I mean, partly I just really wanted to hit 100k. This is super ambitious, but definitely not impossible. My wife had like a pay rise. I expect to have a pay rise in April. Also as well, because I changed jobs sort of quite late in 2022. I didn't get a bonus in 23, but should get one next year. So again, that will contribute as well. So again, I think 100k is probably quite ambitious. But I'd rather go for 100 and miss it by a few thousand than aim for 80 or 90 and smash it. So and plus again, everyone wants to make 100k, right? So that feels pretty good. In terms of changes and things that have happened, you'll see 2024 my personal contribution to pensions is a little bit reduced. I played around a lot with my pensions in 2023. I'm in the current my tax amount at the moment is in this awkward phase where I'm trying to put as much away from the tax man as possible and was tweaking the amount to give myself like employer matches and slightly above, etc. But now that should, broadly speaking, stabilize a bit more, but we will see. I do also expect my, next year there are elements of this that will increase. So, for example, my pension from my employer, as again, hopefully I'm going to get a pay rise next year, so that will help. Similarly, as well, I expect my wife, my wife has got a pay rise from January, but I also expect to start increasing my wife's contribution to pension. I've asked her to sort of work with her employer to understand what the maximum is that they'll provide in terms of percentage, but we'll probably be increasing hers now that she's started to earn good money. So there's an expectation here that hers will be increasing in 2024. Then the ISA here, I mean, from April, I'm just going to split it between mine and my wife's ISA, but basically just the way that this falls between sort of January and March and, the ISA tax year means that we'll be putting slightly more into my wife's ISA. But again, you can kind of eyeball this and see that we're targeting about 40 grand a year, which sort of makes sense if you think about the run rate and the target for the ISAs. Again, they remain our most important investments, so we will be continuing to max these out whenever we can. My daughter's ISA here as well, junior ISA. We could put more into this, but we just don't want to. We think sort of getting 40 grand for an 18-year-old, which is broadly speaking what it should be by the time she gets there, is plenty. And that's basically our philosophy here. So we're going to keep this up. We're going to do £100 every month until she turns 18, and then basically give her that check. I don't even know how it works, honestly. If anyone has gone through the whole junior ISA process, please explain to me how it works down below in terms of when she turns 18. So I'm not entirely sure what happens, but I assume some kind of letter and check comes through, and then she gets to decide what to do with it. We will see. There's also a big jump here in our non-ISA investments, and really that's a result of us building an emergency fund over the next year. It's something we've not really done despite being invested for like 3 years. I think now that we have, a dependent, a mortgage, me and my wife are both working, sort of getting our house in order, as it were, is really important. We've now started to understand our costs a bit more as well. So I think we need about 35 grand for sort of 6 months costs, which probably sounds like a lot. I think it sounds like a lot. But that sort of covers our necessary costs as well as some sort of I wouldn't say necessary, but they're things like food. So maybe we'll be able to trim them, but we still need to eat, right? So there are sort of semi-necessary costs in there as well. So again, we're expecting to see quite a big increase in that. And then that's offset by our debt arbitrage here. So this is my credit card that I spoke about last month. So it's got 12 grand on, and I don't have to pay any interest on it for like 15 months. So we're just loading it up at the moment, but making sure importantly that we have enough money offset so that if anything happens to my wife or me, we have instant funds available to pay it off. So that was a condition that my wife imposed if we were going to start using debt for this way. So again, pretty big targets for 2024. Not sure if we're going to meet them, but honestly, if we fall a few thousand short, I'll be quite happy with 95 or 90, whatever. I think we can. I think not getting into the 90s is feasible, but I think getting the six figures is going to be tough. It'll be awesome if we can do it. Again, pretty happy with 2023, honestly, and it's important that we start the snowball nice and aggressively. And to me, especially a few months ago when the market was being really rubbish, it was great that at least we were kind of trusting the process and continuing to build our wealth by contributing to it, right? So that this sort of was a bit of calm in the storm during the middle of the year. So really happy with this. We'll see how 2024 goes. But yeah, more of the same, hopefully. All right, so if the previous bit was how we've been adding wealth, this is our actual wealth. This 460 here is the bit that's on, the thumbnail, and we've already touched on. There are a few new things here though. So first of all, I guess I'll just start with the debt arbitrage that we touched on. So, we've got sort of 16.5 grand in instant cash, and then credit card currently at 6.7k. So plenty of headroom at the moment, and that feels really good. I did open two new bank accounts and actually made quite a few changes to my bank, which is my Santander current account, which is kind of up here in the middle. And basically, I've had a 123 account, and anyone in the UK will know what 123 account is. I think I've had it for 10 years. Me and my wife opened it shortly after getting married with, kind of our wedding money, so it's kind of got a special place in our heart. But we've never changed it, and gradually over 10 years, it's become less and less good as an account, I would say. And anyway, I was kind of looking at what Santander were offering me. I got my credit card through them as well, as we've touched on already. But there was a couple of savings account, and one of them, especially this account here that's new, it's called Sant MS and Sant Edge. But basically, I'm able to put sort of 4 grand into one of them and get 7% a year for the first 4 grand. So 7% for me just feels like a very good place to put 4 grand. Unfortunately, that's the most I can put in at the moment. Otherwise, I'll be putting in a bit more because 7% safe money just feels absolutely good. I'm quite happy with that kind of return. And then I've also got one where I can put £200 a month in, which is 5%. So less good, but still okay. It's sort of there and thereabouts. And again, to be honest with you, if I was getting too much more, I'd have to start thinking about tax and things like that on my savings income. So I'm kind of okay with these amounts. It's just a good place to park some cash. Again, if we need to move money between the accounts in Santander, then that feels fine. A couple of other things this month. So as we've already touched on, I do expect the other to build, but you'll also see here that the cash account in Santander is currently quite high, and that's because our January is very expensive. We have a bunch of like service costs, ground rents, school fees, etc. So that's a bit high at the moment. It won't look that good in a week's time as January rolls around. We've also here seen a really big jump in our premium bonds. So I added £3 grand to premium bonds. You can see it's kind of ramping up quite quickly now through the year. But yeah, the premium bonds for me is I know it's only about 4.5% return. I personally like a bit of a gamble. For anyone who knows me, you know that's true. So that makes it a little bit more exciting, and it's tax free. So again, it's 4.5%, but that's way better than I can get most other places by the time I've paid 30 to 50% tax, which is what I'd be paying in most places. So again, we're building up our premium bonds as well, so that makes some excitement. And then we've also got here our cash in our Virgin Money VM here. This is part of our mortgage offset. So basically, I don't get any income from this in terms of savings, but it reduces my mortgage payment and gives me that flexibility as well. At the moment, me and my wife are choosing to overpay our mortgage by about 15%, which is the amount of money we could save from the mortgage offset. But for us, we'd much rather sort of, we have a figure in our head which is 2.2k, and we're just going to keep paying that figure. And ultimately, what it means is the more money we have in our Virgin Money current account, the more of that payment is going toward our capital and the less to interest. So that kind of makes me feel good, and my wife actually as well. Like paying down the house is a big one for my wife, so again keeps her nice and happy. I've also on the right here changed what was a table into a graph. I think it's kind of cool to see it now that we've got like a year's worth of data. It looked quite modest for like months, and then again the last couple of months here it's really got going. You can also see here, cash, which or other. Sorry, I've changed it to other. Will grow because the emergency fund is basically going to sit in other during the year, is my expectation. And then likewise, ISAs are expected to be more than 50% of our eventual retirement. So even now they're only sort of 38%. They should drift up over time to be sort of 55% by the time we get to retirement. Originally, the house was meant to be less than maybe 10%. But with interest rates being what they are, we're sort of actively trying to pay off our house as quick as possible. So we're making some, again, overpayments there as well. So maybe that will change in the medium term. But for now, it's basically ISA, pension, house in that order, again, with the emergency fund accepted. So I've done this table by 3 months. I think now that I have a year's worth of data for January, I'll be able to also show, year on year. So for me, that'll be pretty interesting. And we'll just continue to track this, again, add accounts and remove accounts as and when they come along. But again, really happy with this. And you can see the big jump over the last 3 months, right? 400 to 460. But most of that's November and December. So currently how we're doing. All right, so another thing we've changed actually quite a lot. So beforehand, this was looking purely at my ISA share investments, but really I've tried to make this a bit broader. So now, because we're starting to take premium bonds and cash savings a bit more seriously, right, with the emergency funds, with the kind of diversification, I decided to kind of track this back as far as I can, which is more or less a year, and sort of give a breakdown of where we are. So each figure here is similar to how the ISA was working already. It's basically what's being added into the premium bonds, into cash savings. Any withdrawals will include money from both of them. I have it set up with NS&I, who manage the premium bonds, so that if I win anything, hopefully I'll win soon. I'm looking forward to my breaking my duck. That'd be nice. But when I win, it actually gets paid into my bank account. So that will be showing as withdrawals. Similar with cash savings as well. Again, the stuff in my Virgin Money, there'll never be any cash savings because it's reducing my mortgage. But actually, the stuff in Santander will start to have cash savings. And again, my plan here is to withdraw it from the savings account and just basically use it elsewhere. So we will start having withdrawals from there. But you can see here the big jump in cash savings. And again, that's really been afforded by my wife's bonus in December. So thank you very much, wifey. That feels really good to have that big jump. And again, that's broadly been split between sort of Virgin Money and the Santander accounts. as well. So some good progress on those things there as well. And also, to be fair to myself, I also put like 2.5k into the Virgin Money a couple of weeks ago from my December payslip as well. So because I didn't have too much to add from ISAs. Saying that, we did still add 2.8k into ISAs. We could have added a bit more into ISAs this month, but I've decided that basically all I have to do is add 2.8k for the next 3 months, and we'll hit our targets. Markets look quite expensive at the moment, so we're just going to average in for the rest of the year, and again we're going to sort of build some of our other pots as well. So moving forward, we'll report on sort of shares, premium bonds, and cash savings, and again this should add up over time. Also, as well, for anyone who wants to rewind the video or remembers, this 16493 here, this is sort of equivalent to premium bonds plus cash savings, so 6.5 plus 9993. That is sort of our debt arbitrage amount, right? So everything that's in premium bonds, everything that's in our cash savings, that should always be above our credit card amount. So that's where that number sits basically at the moment. And yeah, or as I've already touched on, I forgot to put this point at the bottom, but I'm not going to redo the video now because it's getting quite late. But yeah, the plan here is to withdraw everything and basically see it in our bank account. So that's exciting for myself and indeed wifey as well. So that should be good fun. Anyway, we're just going to have a look at the details now and then plans for 2024. All right, so in terms of the dividends, it's actually a pretty good month, to be honest with you. I wasn't 100% sure if I was going to get my dividends in for T. Rowe Price and Huntsman, but actually trading 212 has been pretty quick recently with dividend payments, and I got them both on the 29th when they were paid, so that felt pretty great. And overall, yeah, this is a fairly decent month for me. I would say the sort of third month of the quarter, just because a fair few of my larger American positions pay. I've also got a couple of the ETFs here as well, including my real estate one, which is now quite sizable, but again, I'm quite tempted to add to it in the new year, so we'll see how that shakes out. Outside of that, it means that my dividend for the year finished at 2.9k, a little bit up on 2.7k last year, and I expect it to be about 3.2k next year. So about 10% growth year on year. That's despite the fact I'm adding a solid like 30 to 50% of my portfolio value. It's just really a reflection of the fact that I'm now not really a dividend investor, I would say. I'm just kind of focusing on overall returns. But especially in 23, when I was sort of pivoting to tech quite heavily, that just meant that there was fewer dividends from that perspective. I'm not entirely sure what I'm going to be targeting in 24, probably sort of emerging markets and smaller caps. So again, I don't expect them to have a ton of dividend either. And really, I expect my dividends as a yield of my portfolio to be modest moving forward. So 3k on a current portfolio value of 170k. What's that? About 2%. So yeah, okay, slightly under 2% is the way I think it's going to be in the future. I'm pretty happy with this though, especially now we've almost got like the 3-4 years. We can really see the breakdown, and it is gradually growing. So it feels pretty good. And I still love receiving dividends, by the way. And I've been averaging down or averaging up, generally reinvesting as I've received these. So that feels pretty good. That's everything for now as of the end of December. Like I said, it was really good. However, I would just like to discuss the next plans for 2024 and specifically what we'll be aiming to do from a financial perspective then. So let's do that now and then we'll wrap up. Alright, so things to do in 2024. These are in order. I've got 6 of them, so it may well be that we add to these during the year. The first thing though is to review my wife's pension contributions. My wife's pension contribution for her salary is still quite modest. I think she also has salary sacrifice technically rather than traditional pensions that we have in the UK, and her employer is the US and isn't always 100% familiar with UK regulations, so I basically asked her to go and have a conversation. I am aware that a lot of American employers don't have as good a pension match as UK does. I think at the moment she's kind of on 4%, which I think is quite normal, but again, from limited knowledge. But again, we'll see what she can contribute. She's like nearing some very inefficient tax levels, so we may well sort of find a good reason to add to it then. But minimum, she's had like a sort of 20% pay increase, and I think it makes sense to review what this looks like. So we'll be doing that in January. This has been on my list for a couple of months and just hasn't really had the focus from an admin perspective. But I really want to move my daughter's junior ISA from Nutmeg to Hargreaves Lansdowne. That's really just a reflection of the fact that they're offering, no fee junior ISA, I assume, in the hope that you will also move your adult ISAs or indeed pensions over to them. Need to wrap that up and then see if that's worth doing. Next up, we want to complete our ISAs for the 23-24 tax year. So I technically have until April the 5th, I think it is. I expect to complete this specifically when I get paid in March. So we've got 2.8k for 3 months. Should hit that. And yeah, so that's important again that we continue to max out our ISAs. Next up really is sort of a wider review of private pensions, especially my private pension is sort of not too far away from 6 figures. And some of the, like, I think Nutmeg is very good and it's simple, to be honest, when you first start with your pension, because it doesn't have any of the sort of fees or any of the higher management fees. But there's some reduction as you start to sort of move between 75 and 100k of your portfolio value that maybe other providers might be better suited. I'd also say as well that when I originally chose Nutmeg, partly I liked it because it was so simple and I could concentrate on my ISAs where I had a lot more of, you know, the sophistication, picking individual stocks, etc. As a result of sort of being not able to buy individual stocks anymore because of my wife's restricted trading, it makes me wonder whether I can have a bit more excitement in my private pension. And so that's something I'm going to explore as well as the fees. So yeah, basically options, what I can do, etc. So there's no rush on that really. I think any kind of difference in savings or excitement is going to be very modest. But still, I'd like to do it sort of April. To me, makes a ton of sense. Then we got the two here for the rest of the year. So the first one I touched on this, but build an emergency fund. I think it needs to be about 35k. I'm still in the process of kind of getting my costs really itemized, but certainly the couple of months that I do have tell me that I need about 5 and a bit k per month, and I think 6 months is probably about right. But again, that's the target this year. So we're currently on about 10,000. Or really, yeah, about 10,000 once we adjust for the credit card arbitrage, so we can start there. So we need to sort of find another 25k across the year, which is no small figure. And this is somewhat ambitious. I think that a lot of this will depend on sort of bonus levels and potentially my pay rise, etc. So, but at the very least, I'd like to build a reasonable way toward it, just because again, we don't have an emergency fund really at the moment. And last but not least, as we touched on, the big goal for this year is to try and contribute 100k across all types. Again, ISAs are the main one, pensions are there, and then emergency funds. But we still want to continue with the pension, with the mortgage. But I suppose that would be something that we could consider not overpaying. But again, I think it's exciting to be sort of seeing the months falling off the mortgage repayment. And again, wifey really likes it, so it's important to keep us both motivated in our own ways. Anyway, we'll continue to do these every month. Hopefully soon we'll hit our 500k. It's been a while since we hit a milestone of 250, but hopefully they'll come a little bit faster now as the snowball gets going. It's been a really interesting year, quite rocky. I got off to an amazing start, then had difficult periods. Like I've kind of had 3 month cycles, and I guess I'm due a really bad month in sort of January and February if that continues. And it'll be interesting to see what the stock market does for next year. I'm considering doing a separate video on crystal balling for 2024, as well as reviewing my, I think, quite bad crystal balling for 2023. But I will see what time allows anyway. For now, let's wrap it up here. Thank you very much for watching, everyone. I've been the Boss Hog, and good luck with your wealth building. Bye for now.